Hello, Face. Let's have a great week. How's everyone doing today? Who's in the house? Hello, Amanda Sweeney. Alexandros, how are you? Ace. Good morning, Patrick, Glenn, Kevin. And welcome to viewers on investing.com. So here's a complimentary look at our service. Greg Horvat's looking for one more low in US dollar MEX. Okay, I call Greg the Wizard of Ways. In fact, he's going to be with us here today. Blake is back in town. I know everyone missed Blake, so we'll be hearing from him shortly. So here's Greg's count. Looks like one more drive down towards a 17 handle. And here's the live look right here. So could probably sell any rallies, stops above these highs, looking for new lows. Looks to me like we're starting to get some type of wedge, 3 drive to a bottom formation setting up. So this is definitely on my radar now, especially since Greg is looking for a completion down there. So here's a look. You can see we're diverging already. Get rid of this. Okay, here's your confirm low. Here's your first divergence. Here's your second divergence. But as I've said before, sometimes on the third drive, you could end up with a fractal. And the third drive could actually end up being a 3, a slice in time of the bigger picture here. Give me why if you see it. I also want to update investing.com viewers that were with us last Thursday. And we were talking about a bottom in the pound from the 27.5 level, which is exactly what occurred. Had a nice rally. In fact, the pound is beginning to outperform euro. That's why EG is coming in. EG did diverge up here, waiting for the RSI, but it's still a pretty high reading. I'd like to see one more rally in EG up towards 92.80 and the RSI stay well beneath this recent peak. Everyone with me on that? And also euro. Okay, so euro's underperforming and it may be in some type of ABC. We could pull back here, but look at this reading at the high. Like an 80 reading. So maybe we get A, B, C, and then another shot up. Just something I've noticed, and it's a study in gaps, that if you go to the weekly euro, there's a gap right here. The high this day on the way down towards the 104, 103 level was 119.76. The low the previous day was 109.98. So this gap will be filled at 98. That may end up being a decent place to try a scalp into the gap. So as far as a study in gaps, if you subscribe to the theory that gaps are always filled, you sure waited a long time for this one to be filled. Okay, and we haven't even filled it yet. So throw that in the garbage can. They may be filled, but not immediately. In fact, look at this gap down here. Will it be filled one day? Sure, probably. But if you were trading it looking for the gap to be filled, you've lost a lot of money looking for that. Everyone with me on that? So gaps may be filled, but it could take a year. And could take a lot of price against you as well. Hello, Peter, Glenn, everyone doing okay? All right, so pound looking better. I still think that we have a rally back towards 130. This is your, I wanted to show you this was your weekly. Look at the 4 hour. Steve was talking 130.5. 130, there's their 200 comes in right there, 29.95. So I'd buy any pullbacks to 8.5, looking for a minimum of 130 in cable. Everyone with me on that? And then last week I also talked about a bottom developing in pound Aussie it was weaker on the initial response than pound dollar was, but still could be shaping up for this bottom here. You're wrong under this spike low. The levels were 67 to 62 to 6160. The low was 6162 on Friday with the remarks from Yellen. So still think there's potential for a rally back to 64, 3.5 to 4. So I'd be looking to buy breaks here. You're wrong under Friday's low under that 60 level. And we have Blake Morrow back from being of service to his family. And, you know, a lot of guys that are successful would have just cut a check and hired a mover to help his aunt. Blake went there in person to help her. So that speaks to how Blake is in the FX community. He's always here to help. He's helped many traders, many people, many aspiring traders over his career, at least 15 years of moderating an FX room and working with people like we have in face here today. So welcome back, Blake. Missed you.
Thanks,
missed
Dale.
your views. Yeah. How are you, buddy?
Good, good. Well, let's be honest here. I also use the experience as a way to visit family too. So it was a good. It was a good trip. I mean, I did move my aunt. She's safely moved from Nebraska to Iowa. But like I said, I used it as an opportunity. I was literally on the road every single day, visiting family that I haven't seen, and some of my cousins I haven't seen in almost 20 years. So it was
great trip.
It was really nice. You know, I got to meet all my cousins' kids. You know, some of them are in high school, and I hadn't even met them yet in person.
Wow.
Yeah, I mean,
How'd the corn yields look to you, Blake?
Actually, they look pretty good, believe it or not.
All right, well, that's good.
Yeah,
I love corn on the cob, so that's good.
It was, you know, it was a really nice trip. I went on a road trip basically with my father, and
Did you trade much last week? You didn't miss much till Friday.
I didn't trade a bit. Not even in the least amount. Yeah.
You have to recharge your battery a little bit.
It was, and I've come back obviously to realize that I probably should have just stayed another week because there, minus the move that we saw in the euro and really the dollar on Friday. I mean, it seems like that was the only.
That was all week.
Yeah, that was pretty much it. And I even got messages from while I was driving, and I had intermittent internet connection just because I was out in the rural Iowa, and every once in a while I'd get like a burst of messages from our team chatting on Skype, and then I wouldn't have connection for a while, and but from what I've seen, and every once in a while I would just take a quick glance at the market. What I saw is the market was very, very slow up until Friday.
They say that the summer's always slow in trading and everything else in the biz, but as I told you yesterday on Skype, didn't slow ForexAnalytix and face down at all. We topped the 2,000 mark on registered users for our webinar.
That's great. That means a lot of people are listening in, which is awesome. It, even in a slow period of the markets, that's good to see. And as the volumes start to pick up over the next couple of weeks, it's only going to get better. And that doesn't mean there's not opportunities out there. I think there are opportunities in the market, but you have to be very. This is the time where you have to be very cautious and very picky about what you're doing, and going through the weekend analysis, which I had an opportunity to do, is go through and look at all my charts and really find some specifics that I'm looking at, which I want to share with you guys today, because all in all, I could realistically sit around here all day and not do any trading if things don't develop the way that I want them to develop. Now, I'm going to be interested to hear some of Grega's Elliott wave analysis too, just from a trend extension standpoint, because I look at the euro dollar and I honestly look at the euro and I don't know of anything to do right at this moment in time. Like, I look at it and say, okay, well, I missed the, now, keeping in mind this is coming from somebody who wasn't here last week. I missed the move last week. It doesn't surprise me that we have rallied because we couldn't break down. If you look at the longer term outlook of the euro dollar, we came down and retested, and you can see this blue line here. We retested the breakout point at basically 117, 116.80. We couldn't break lower, and because of that is it was a shallow retracement. It was a shallow consolidation, and so it doesn't surprise me that we went higher right now. Now, again, I'm going to point out from the perspective of somebody who wasn't here last week, because I wasn't, and I'm coming in flat. So the question is, what do you do now with the euro dollar? And honestly, I don't think there's anything to do right now with the euro. I physically can't buy the euro up here as it broke new highs. I'd have to wait for some sort of pullback to get long. So, if I just looking at the euro dollar, I'd have to see a move back to like the 118 level. I got to see a move back down here, so maybe even a retest of this trend line to get long. And does that mean it's going to happen? No. And a matter of fact, it may not even happen. If I'm looking for a move that looks like this, I may just be waiting here forever. Not saying forever, but I won't. This week I won't end up touching the euro dollar, because maybe the euro dollar just continues on to 120 from here, which it doesn't allow me for any new opportunities if that's the case. There is one thing that I'm looking at right now, Dale, that could suggest that we might get a pullback. Do you know what that is? One thing that, nope. One thing that
I give.
You give, okay.
Oh, okay. Yields might be peaking. I mean, the bonds might be peaking out here. Oh, the gold. Okay.
Yeah, I have gold. I mean, gold's at really key resistance here. It's at 1,300. Yeah. So, will gold break higher? I mean, we have this bull flag pattern that suggests that we're moving higher. The 127% extension comes in, at 1320. So that's where gold looks like it's going.
It sure has knocked on the door quite a few times.
Yeah, this 1300 is huge. I mean, this is huge resistance right here. Will gold?
But we haven't had a close over it, so maybe today we get the close.
Maybe.
Yeah.
And if we do, if we do, then the euro dollar is probably going higher. But if we stall here at 1300 and we can't make it above 1300 and we slip back to, like, let's say 1290 or 1285, that would suggest that the euro might actually pull back. Again, do I think that the euro dollar is going higher? I think it is, and I think that gold's going to break out. But I don't know. I'm sitting there watching equities. Equities continue to press higher. You mentioned the euro pound. I mean, I had tried to short the euro pound, and I got stopped out of it a week and a half ago, or before I left. It was pushing up here, and I just got stopped out as it broke higher. I thought we were gonna have this ascending wedge, and we just broke higher out of the ascending wedge, which means the ascending wedge didn't develop. Which fortunately I kept my stop really tight. I think I actually got stopped out Sunday night, Monday morning. This is
they call that a throwover, Blake. So if we close back within the wedge, then you got something.
Yeah,
Back
and
inside.
and it's entirely possible up here. We do have a breakout, or at least we're trying to break out. But the thing is we could end up pushing back down here in the euro pound. It is quite possible. And here, let me get rid of this. This doesn't belong there. But the euro pound does suggest that the euro is going higher. Now, again, I'm looking at gold. I'm seeing gold not breaking out, or at least on the cusp of it. And one of the things that might stall gold today is that equities seem a little stronger and a little bit more well bid today. So as long as equities don't collapse, there might not be any reason to buy gold. So therefore the dollar could maybe make a little bit of a recovery here. And if you look at the S&P, I mean, we pivoted right off this trend line support last week. This was last week. I wasn't here last week when we did this. Here, let me get rid of this fib here. That's old. But you can see how we made a nice little pivot off this trend line support here, and we're still pretty firm. Now, we are still in a very tough time to be long equities. I mean, we're going into the end of summer, or we are in the end of summer. We're going into fall, and typically these times are very tough for the equity markets to make any headway. So, will we eventually break lower? I think we'll eventually take out this trend line. I don't know if it's this week or 2 weeks from now or whatever. But when we do, I think that will be a reason for traders to be long gold. And if gold breaks out, then that's probably going to continue to weigh on the dollar, and that's going to continue to push the euro higher. But there's no reason, like I look at the euro dollar, there's no reason to short the euro. I mean, the euro looks like we're going to 120. Now, technically though, let me point out a couple of things technically, which if you use ForexAnalytix, I'll just use the analysis that I did this week. If you notice that the euro dollar, we have a very divergent relative strength here. You can see us pressing new highs, okay? Yeah. Relative strength isn't. And if you go to the weekly chart, relative strength is very overbought, and it is divergent. I mean, it's overbought, and you can see the peak of relative strength right now is not matching the peak from 2 weeks ago. So, but is that any reason to is that any reason to be short the euro? No, all that's telling you is you got to be really careful.
I would love to see it follow that path that you have up there.
Well, this one right here?
Yeah.
Yeah, I mean, it seems logical, but again, I look at the dollar, and the dollar has had zero bounce. Now, there's a couple things that I am looking at, like regarding the dollar. Because I have to go back to the conversation we had
before you left.
Before I left,
you couldn't think of one fundamental reason why the dollar would go up.
Exactly.
You were right, man.
But you remember, this is the conversation we've had not only the week before I left, 2 weeks before I left, the month before I left, 5 months ago. I can't really think of a reason right now to buy the dollar, and really the only thing that I can think of, and this is still the only thing that I can think of, is technically it's oversold. The dollar can be more oversold. The dollar can be more oversold here, and we are at a lot of support at the dollar index. I mean, we're at 92. These are the spike lows. I mean, you look at the last couple of years, we're at the lows that we've seen in the last couple of years. But we're divergent on relative strength. Oversold on the weekly charts. Oops, here, let me go over to the weekly charts. We're oversold on the weekly charts. So the only thing I can think of is technically we might get a dollar bounce here in the next couple of days, and then if we have a strong jobs report on Friday, maybe that just allows for a further bounce in the dollar. That's the only thing that just because we're technically oversold. But there are a few things that I'm looking at, Dale, and these are things.
Could pound kiwi be one of them? Because we have some very talented guys in our community. Blake and Luca's one of them, and he's saying pound kiwi looks to be on the verge of a trend change.
But that's not going to trigger my decision making for the dollar.
Right. Okay.
We're sitting down here at a lot of support. I mean, there's a lot of support down there. But if you want to talk about the dollar, there's a couple things that really quick. Let me go over this really fast, and we can look at the pound New Zealand.
Right.
This is the U.S. dollar Canadian. Okay.
Yeah.
This is a weekly chart of the U.S. dollar Canadian. Do you see this trend line here?
Yeah. This
one right here?
Yeah.
Okay. It is a multi-year trend line that comes in right around, let's just call it 123. It comes in around 123, 123.50, 123.20, 123.70. It depends how you're drawing your trend line. I mean, technical analysis is not an exact science. If it was, we'd all be, gazillionaires.
You have a 1.272 retrace at that level too. I see some fits.
There's 127% extension that comes in from this last move higher that comes in right around 123.25. So do I think the dollar Canadian, if we get down to 123.50, 123.20, is that going to be a good area to be long the dollar Canadian? Personally, I think so, because if we hit, now if you look at this daily chart, if we hit a new trend low, which looks possible, so for those of you that are long the dollar Canadian, you got to think about this for a second. If we hit a new trend low, relative strength is going to be divergent, because if we come down here, relative strength may go back into oversold, but it's not going to go back to where we were, just a couple of weeks back.
Layering, it'll be layering divergence.
Yeah, it will be. So, if we get down towards 123.50, I am there at that point in time, I might be looking for a counter trend long, because I think the risk is manageable down there. Again, do I have any reasons to be, short the Canadian, long the dollar? No. Maybe there's something that happens with the NAFTA agreement that good point. With the negotiations that maybe takes place that just coincides with that. But I'm really looking at that price to be a place of interest for me, to be long the dollar Canadian. Again, it's more just technical than anything. I'm looking at the U.S. dollar Mexican peso. The reason why I'm looking at the dollar Mexican peso here is it is outperforming its dollar peers. If you look at all the you look at all the rest of the currency market, the dollar Mex is actually higher today. It's actually looking a little bit better. Now it has come off the last couple hours. You can see the 4-hour chart, it's actually come off a little bit as it hit some resistance. But we have a nice down channel here in the US dollar Mexican peso. You can see this nice little down channel. How about if we break above that channel resistance? Yeah. Then we might get a real big shift or reversal in the
Wizard's looking for one more low, Blake, and to complete an A.
You know what? I'd be interested to hear momentarily. I think Greg is going to be here, so I'd like to hear.
My nickname for him, huh? The Wizard.
The Wizard of Ways. Hey, Greg, how's it going?
How are you, Blake? How was your vacation?
It was, it was hectic, but it was nice. It was nice because I see so many family members, and I got to travel with my dad and do a lot of catching up with my father. But it was a great trip. It was very busy though. We were in the car a lot, driving a lot, and going to different homes quite a bit. So it was nice.
How's your lower back, Blake, from lifting heavy stuff?
Fine. Fine. I'm all good. I'm all good.
You Marine.
Yeah. So hey, Greg, we were just talking about about the U.S. dollar Mexican peso, and you know, I was pointing out the fact that the U.S. dollar Mexican peso, it looks so much better than a lot of different currencies. I mean, you look around, and it's actually holding up quite nicely for a dollar pair. And again, you know what you know, the reasons might be maybe because of NAFTA, maybe because a little bit of risk aversion, which is keeping the peso a little weak. But Dale said you were looking for one more leg lower in the U.S. dollar Mexican peso. So I'd be interested to hear what your analysis is on the peso if you have the time.
Yes, sure, of course. Just put my screen.
Let me flip it on over to you, and I'm gonna.
Are you drinking out of a ForexAnalytix coffee cup?
Am I?
Yeah.
Actually, I'm drinking out of a Birdie Tells, my wife's coffee mug.
Okay.
We only use those we only use those coffee mugs around the house though. So.
All right. Okay.
Okay, so actually, as you pointed out, Blake, dollar Mexican peso is trading still far away from the recent lows, while dollar NOK and dollar CAD are actually both are at the lows, I guess.
Yeah,
so
right.
Dollar CAD is still what, 50 or 60 pips away, but we are close enough to make a new low probably. But what I see here is an ending diagonal, a wedge pattern. The fact is that the recent recovery that we have seen from July lows was very slow, very overlapping, and definitely not impulsive. And to me, that's enough evidence to stay bearish. So I'm looking for a final push down, but I think that there will be a limited downside as soon once we bridge this low of wave 3, because we know that wave 5 in an ending diagonal should not be shorter than wave 3 if we consider that wave 1 is already longer than wave 3. Okay, I hope this is not true.
And Greg, if it's an ending diagonal, those are pretty, you know, reliable and longer-term signals. Am I correct?
Yes, exactly. So, so like Blake said, dollar could gain a lot more against Mexican peso, but I think that there's still room for another low before we may finally get a bounce. I think that during this time, dollar NOK and dollar CAD could extend to much lower levels. So,
yeah, the dollar Norwegian krona looks so bearish. I mean, I know it's having a recovery right at this moment, but man, that thing is just, it has not been able to bounce.
But I'm really interested to see what will happen with crude oil. The fact is that we are seeing dollar NOK moving sharply down despite crude oil being sideways. So if we see a bounce of crude oil, then yes, dollar NOK could extend to much lower levels. Same with the dollar CAD, I think. So I'm just wondering what is holding back crude oil. You know, we see dollar very weak, we see NOK CAD very strong, but crude oil is not moving much. So it's very interesting to see if we get a bounce on crude oil. I think the dollar NOK could extend to much lower levels. And during this time, I would expect also CAD to stay strong and dollar Mexican peso to retest these lows. And maybe then we will look for final pieces of wave A here that I'm expecting to complete this first leg of a bigger free wave decline around or above 17 level. Now here, this was a fourth wave of 1 lower degree, and normally those are very, very important swing levels. Okay, so I would definitely be expecting a bounce from that area. But as I said, another low, and maybe then we can look to the upside. If we breach this wave 4 swing high around 18 decisively, so I would pay attention to daily and weekly close prices. Then I think that Blake, that wave A would already be marked as finished right there.
Oh, okay. Which is still possible.
Yes, of course it is. If dollar NOK will maybe pump and turn up for a bigger correction already this week, then dollar Mexican peso is going already higher into wave 5, I think. So
okay.
Maybe paying attention to this channel would not be a bad idea.
Okay. Well, let me ask you this, because we were just looking at the Canadian and the dollar Canadian. We're coming up to a multi-year trend line, and it's on a weekly chart. It extends all the way from let me get the date just to make sure I've got the date specifically. You know, from like the lows back in 2012. I know you have to actually look at even a little bit further, but that the support comes in at 123. 123.50, 123.20, 123,
Yes.
which
You're probably looking at this trend line, right?
that's correct. Yeah, that is correct.
From 2012 lows.
That is correct. That's exactly what I'm looking at. It's
Exactly.
notice, guys, how Grega has that up too, and this is where we look for confluence in our analysis, because if Grega sees it, I see it, Steve sees it, Nick sees it. You know, we all are looking at around the same prices. That confluence is what makes, you know, ForexAnalytix powerful, because we're all seeing the same thing in different types of analysis. So anyway, that support is really big.
Yes, and you know what? I'm just looking at now. Here was low established in September. Okay, then we have seen a retest for wave 2 again in September. Now here was July in this retest, and now again here we are in this time of the year. So yes, we could see a bounce higher, but that's just from a poor technical analysis. But from an Elliott wave perspective, this was actually my target when I was expecting a drop from a wave B or wave 2. But when we are tracking a third wave of decline, okay, so it's going either to be wave C or it's going to be wave 3. And normally wave C is similar in distance compared to wave A. Okay, so if we put the projections here of 100%, then you can actually see that this target for wave C, which should have more limited downside than wave 3, obviously, it's much lower. The next thing is that I would focus also when I'm tracking our reversals is normally that when price retraces from the high, like in that case, you will see a retrace back into the area of a former wave 4. We have reached the former wave 4 area, but normally the termination point of this wave 4 can be triggered. So it looks like that we could see even lower levels by the end of the year, but I would not be surprised if we see from that trend line that you mentioned a corrective rally. And this corrective rally should occur after this completion of a red wave 5. Now, last week we talked about this wave 4 bounce. I expected a reversal lower from this trend line, from this channel actually. So we are now in final piece of this wave 3. So what I would be expecting and looking for a bounce is recovery into this blue wave 4 from that trend line. But you know, this is a long-term trend lines. We could see a spike below it before market turns to the upside. Nothing worse on the pips or ticks here because it's a longer-term trend line. But I think that weekly close prices should be very important, let's say this week. Maybe a spike to a new low and then a reversal. Thursday, Friday would be nice confirmation that we are probably going higher into a new correction.
That makes a lot of sense. And if we make a marginal new low right there, I would look for a bounce technically there as well. And that's where, you know, again, you have to look at from a risk reward standpoint. You know, does it make sense to go counter trend? And you know, I'm not seeing. I don't like going counter trend as it is, but a move down there might produce an opportunity for a near-term bounce. And I don't think, as Grega points out, you know, it's not like you're looking for a move back up to 140. This might only, you know, give us you know, a couple hundred pip bounce. But you know, if you're risking 50 pips to make 200 or 300 pips, the risk reward is still there to be on the long side down there if you're going to take a stab at it.
Yes, but again, Elliott waves, as you know, are fractal, so patterns occur very similar in each time frame. So once I would be looking and identifying end of this wave 5, okay, I would be looking for a correction probably back to this wave 4. Okay, so this would be actually my new resistance that I would track for a corrective bounce if it occurs to look for a new sell-off. So once we get our signs that wave 5 has bottomed, there is room to see a retest of this wave 4, okay, of these swing levels from August 15th. So clearly there will be room for, let's say, for 300 to 500 pips bounce.
Yeah, okay, that makes a lot of sense. So Greg, when I was looking at the euro dollar, and as I was telling the traders earlier, about a half an hour ago, it's hard when I come in and I'm flat and I don't have, I missed the opportunity, which I'm sure there's a lot of people that came in and they're like, okay, listen, I'm not long the euro, I'm not short the euro, I'm just flat the euro.
Actually, I'm on the same track. Also, just sideways on euro dollar for.
Yeah.
So I don't remember when I traded euro dollar the last time.
I mean, but what do you do with it up here? Because like I'm looking at it, and I only will buy a pullback at this point. But the question is, will we even get a pullback? Because it looks pretty darn strong. Wouldn't you agree?
Look, maybe yes, 3 months back, I remembered with Dale and Steve, we discussed about this potential recovery on euro dollar. Back at that time, I did not expect it, such a sharp move to the upside here to be in impulsive fashion. But what I noticed back then when we were tracking this longer term chart, that this gap from January 2015. So actually it's a gap that occurred after Christmas and New Year holidays, okay? So
1998.
Yes, exactly. And Dale, if I recall, Steve also said it was a real gap, not just a gap on my platform, right? So actually that's a gap which can be filled. Actually, we just tested this region. So to me, this can be quite important for the next few days, because normally when important levels, especially gaps, are filled, they will cause a reversal. So what I expect is a new correction. Now, you can, Blake, maybe check at your broker if you also have a gap there from, as I said, January 5th from 2015.
Yeah, I'm gonna have to look and see if I can see it.
We do on TradingView. That's how I found it today.
Oh, and from 2015. Yeah, I see that. It comes in right around 19. Well, actually about 120.
Yes,
right?
And actually the reason why gap occurred is because we have seen a pretty strong sell-off here going into the year end of 2014. So obviously, as soon market opened, we have seen a new gap lower and then just continuation through. So actually, we are now back at those levels, and I'm really curious to see what will happen here. Okay.
And Greg, this doesn't change your long-term view that this is a 4, which implies that we're going to take out the 103 lows eventually?
I'm still on the same track with this wave count, and even if I would switch to bullish view, is what really matters is the following. We are tracking 5 waves rally for wave C, so this should be then wave 1, wave 2. Maybe we are now in wave 3, expecting a pullback from this gap, as I mentioned, into wave 4, then push up into wave 5. So even if I am bearish on the long term, okay, I would still be expecting more upside after a pullback.
Right.
And so even if I'm bullish, I would look for the same scenario. So let's say for the next 5-6 months, no matter if my predictions longer term are bearish or bullish, I'm expecting same structures for the next few months. Okay, so because we need in both cases 5 waves to the upside. Either this is going to be a wave C, or maybe first leg of a new bullish recovery. Okay, that we would expect it to continue after a pullback. So to me, that's probably the most important. I don't want to predict. Yeah. To predict future prices too far away from now. So what I want to do is going step by step and analyze and predict one wave at a time, and then let's see what happens. And when I have enough data and enough price personality to decide if we are bullish on euro longer term or if we are bearish, then I will maybe switch my views. But for now, I think it's still too soon to do it.
That makes a lot of sense.
I predict you'll meet a mysterious stranger in your life. How's that?
Yeah, that makes a lot of sense, because it's really, I'd like to say that the euro dollar has shifted gears and now we're turning completely bullish, but it's really hard to look that far in advance. I always try to tell traders that I have a hard time figuring out what I'm going to do 15 minutes from now, let alone like 15 months from now, or 15 days from now. So,
if we are intraday traders, if we are posting our trades for, let's say, maybe 3 to 5 days duration, then there is no reason why to look so far into the future.
Right, exactly. Hey, let me take the charts for a second. I want to show you something else that's on my radar, and maybe you can, while I'm doing this, you can pull up your charts, and then here I'll take it really quick. This is the Aussie New Zealand, and this is one that I for those of you that know me, I'm always in tune with the Aussie New Zealand, because I've been looking for a longer term reversal in the Aussie New Zealand for a long time. The problem is where we're at a very, very key level for the Aussie New Zealand, and you can see this right here, this trend line that I have right here. This is the triangle top, and I haven't really made the decision yet, or figured out if the apex have built, we've built a tight enough apex of this triangle yet, but we are up against, and this is a weekly chart, we're up against the pretty key resistance here in the Aussie New Zealand. We do have, and this isn't the best cup and handle pattern, but we do have a cup and handle pattern. It actually took off last week while I was gone. I was wondering if it was going to, although I didn't get long. I remember looking at it on like Tuesday or Wednesday of last week, very frustrated after it moved up. I was like, man, I should have been long, and I just wasn't. But here we are testing some pretty key resistance, and the question, well, I'm pretty convinced that if we make it above 110, then the breakout is happening, where we are then at that point in time really going to start surging towards like 112 and maybe even higher, maybe the 112, which is 127% extension. I think that is entirely doable. And I was looking this week trying to figure out, okay, well, what could be a catalyst fundamentally that could drive us higher, and I haven't really seen any. But looking at the Aussie and New Zealand, I think it's such a key inflection point. I'd like to hear what your views are on the Aussie New Zealand at this point.
Actually, to be honest, it's a very sideways pattern. It's probably a triumph, like you are saying. I'm also bearish on the longer term, and I actually expected a weakness, but it looks like that we are probably going to see a spike above that your highs from April of 2017. Okay.
Yeah, this one right here.
For a spike, and then would be expecting a reversal lower. It looks like that this is quite important level there. We have some momentum from the last few weeks, so I'll not be surprised to see this level breach before we turn bearish. But once we are above that level, I would be expecting that this triangle actually would stay still in the card. So I would not be looking for any decisive break to the upside.
Interesting. Interesting, because then this is where our analysis doesn't match up, which it will happen.
It's a nice trade though. if you buy it right in here to 114.
Well, I think what Greg is saying though is that if it breaks through this 110, and we might get something that looks like this, you know, may break higher and then back down again, and he would be expecting a more of a bearish move from there.
Like
and I don't
false
like
breakout.
it could end up being a false breakout, which again, it as Greg and I both just said, you know, told you guys, it's really hard to try to anticipate moves like that, you know, to try to see, you know, look that far in advance. But we are at a pretty critical level here. You know, I just noticed the euro pound. This thing is continuing to be very strong here. I think we just had a nice bounce. Look at the 5-minute chart. There's a really, really strong bounce in the euro pound. Euro pound still is very, very strong currency pair. Greg, what other currencies do you have on your screen, because, or that you're looking at other opportunities? Because again, it's summer. It's like the last week of summer. Volatility is pretty benign at the moment, and you know, I'm looking around at some of the majors, and we're just not seeing a lot of movements, but some of these cross rates are offering some opportunities. Is there anything else that you're looking at that looks attractive at this point?
Yes, actually, I'm looking at, if we pass me a screen.
Yeah, here it's coming over right now. There it is.
So, actually, what I'm looking at is Aussie dollar. I just think that this breakout that occurred in July, okay, with a lot of momentum behind this move, is actually wave C, a new impulsive move going to higher levels. So I'm again repeating the same stuff as I said before. Normally, when you see a correction or retracement from the highs or from the lows, you will see a reversal back to the termination point of a former wave 4, which in our case on Aussie is 81.60. So this level still hasn't been tested. And if we consider that this wave C is also not made by 5 waves yet, we can expect then that this level will be tested. So I'm looking for more upside here. We have seen a pullback in the last few weeks, and this pullback actually was quite slow, choppy, overlapping, clearly a corrective move. And what I really like is that this move, this reaction to the upside was very, very strong. So if we compare this reaction and this structure to any previous declines, you can see that clearly there is something much bigger behind the bullish move compared to previous bearish structures. So what I think is that this is first leg, and then we have seen a pullback, ideally wave 2, and we are going to see higher prices. So what would I expect is by the end of the week, the prices will retest 80.64 level. Okay, so I'm looking for more upside on Aussie dollar. I think that at the moment, this one has probably the very clear structure when comparing to other pairs.
So the Aussie might have some catching up to do to the upside here.
Yes, and actually I'm long VIP since 2 weeks back, I think, from 7.860 and 7.9, and it looks like we are progressing very nicely. So if members follow that trade, they should pay attention to further updates, because I think that I will probably adjust in validation level as soon as we pass this wave 1 swing high. Okay, and probably then I would mark a new invalidation level right there.
Very nice. Okay, cool. Very cool. So you see a little bit higher prices in the Aussie. How about the Kiwi? Because the Kiwi has been, and this will play into the Aussie New Zealand analysis we were just talking about. The Kiwi has been stuck. It hasn't been moving at all.
Excuse me?
The New Zealand dollar.
The New Zealand dollar.
Yeah, because the New Zealand hasn't been moving at all, and this will play into the Aussie New Zealand analysis we were just talking about.
Yes, but what is really interesting for New Zealand dollar compared to Aussie dollar, that yes, on Aussie dollar I'm expecting a continuation higher, into a fifth wave. Okay, so we need to consider that once we get a fifth wave, the upside will be limited. So for the next few days, I'm also expecting New Zealand dollar to rally, but probably we will not see moves anywhere near July highs, because we had 5 waves of decline and now we expect a 3-wave bounce. And normally this 3-wave bounce, again, it will take us back into the area of former wave 4. So if someone wants to be long dollar against commodity currencies, then this one, New Zealand dollar against the US dollar, should be better choice, because the structure is much more clear, and it suggests that it could be much weaker once we get to the downside, because it's weaker already now compared to Aussie when you're looking at against the US dollar. So my idea is here that we will see only a temporary bounce, but both pairs, Aussie and New Zealand dollar, could recover in the very near future with a similar pace. So we may see a 3-wave recovery here up for a wave B, while we may see a new retest of the highs on Aussie dollar within wave 5.
That's exactly was my analysis on over the weekend with the video update with our week ahead video, is that the Kiwi dollar has really been underperforming, and if you're going to play the dollar to the upside, it's probably the currency pair of choice, I would think. If you want to play it, it's one of them anyway. And then again, there's a few of them I'm looking at regarding like the peso and that also has been outperforming as well. So
at the top of red B, you stop drinking milk until we get new lows.
Yes, exactly. After we
All right. Milk is for babies anyway, right?
So hey, Greg, thank you so much for your analysis today. Dale, I know you have somebody coming in for an interview here at the top of the hour. Did we have any questions that need to be tackled before that? Before your guest?
Not just a guest, the one and only Chris Carolyn.
Oh wow! All right, great.
Okay, so looking forward to talking to Chris. Known about him since I was not since I was a kid, but a long time ago.
Man, that was like since a kid. Wow.
Yeah, when I was trading with tape under glass back then.
Now that's old school. That's pre-Quotron. All right. Well, Greg, are there any other currencies that you're looking at? I know you were looking at the Aussie. Anything else?
How about Euro Pound, Greg?
Really? Euro Pound. I'm on the sideline on this pair. I'm just waiting to see if I'm on the right track or no. I still see this potentially to be a 3-wave recovery. We are most likely near 78.6% probably. So I'm expecting a drop, but so far I don't have any confirmation that this drop is already here. I would have to see 5 waves of decline through this bearish level. Okay, and definitely we need this channel. So if I will see that type of a price action, then I may look for shorts on a pullback. But until then, I'm just tracking it far away, actually. So,
I think for our viewers, for people that are looking for, maybe position shorts in euro, and I forgot my own stuff last week. I mean, I never want to fade the euro when euro pound is leading to the upside. So I think what you want to look for in the upcoming weeks, I know it's forecasts, is a time when the euro's making a new high and euro pound isn't. So that would be a leading indicator for me that the euro rally's lost its leadership.
Yes, or it's connected very strongly to pound moves, to cable.
Right.
Yeah, and
we had seen a very strong divergence between euro dollar and cable actually as you know, we have seen a nice move down on cable, but euro dollar still at the highs. So
Yeah.
it's pretty tricky to track to trade this one at the moment. So
Okay. So sometimes the right trade is no trade, bro.
That's exactly right. That's exactly right. Hey, I was still looking around, and I was looking at the U.S. dollar Norwegian krona, and we've had a lot of I know you guys have really been targeting the U.S. dollar Norwegian krona to the downside, and it continued to break lower, and so that particular currency, I mean, that looks weak, extremely weak, because we broke all sorts of support that we've had for the last couple of years.
yes, we did, and it looks like there is room for more weakness. Actually, from a minimum perspective, again, I would look for retracement back to the former wave 4. And what is really interesting, so I'll be looking for deeper wave 4 here, just need to update my chart. And what is really interesting is that this wave 4 comes in right at this level from 2008.
Wow, and that doesn't come in. That's like 732, 740, somewhere around there.
Yeah,
Yeah.
Steve Olney paid for his vacation with that short.
That's nice.
Yeah.
That's really nice. I know you guys have been have really been targeting that over this last week. I mean, it has been a just relentless move lower. I expected a bounce 2 weeks ago, but the bounce was so minor that it just
very
barely.
slow momentum at all.
Right.
So it looks like that if we consider that dollar CAD could continue lower after that pullbacks into wave 4, then we can expect much weaker prices on dollar NOK if we consider that here lows are already established. We are much lower while dollar CAD still has room to make a new low, especially once we get the pullbacks. So I think the dollar NOK during this time could stay much more stronger.
Yeah.
I would be tracking pullbacks very closely. But new pullback, some short trades now, I think it's too late. We are at the new lows, probably a 5th wave here, and I would be expecting a new recovery in 3 waves soon. So chasing markets here for the short side, I don't think it's a good idea.
It's dangerous. It starts to get dangerous down here. I agree.
Especially because I don't see any good near-term swing zone to place maybe stop loss to make a good risk-reward trade. So because we've seen just a sharp move to the downside, so I would rather stay aside if traders are considering to join the downtrend. I think it's too late.
Yeah, and hey, real quick, Brooke asked if there's if the flooding in Texas would have any effect on crude oil prices, and I think the refineries have had limited impact, if I'm not mistaken, over the weekend.
That's amazing.
Yeah, and I think that's why crude oil prices are not significantly stronger as a result.
The gasoline prices are.
Gasoline prices are, but not actual crude, right? So so we just haven't seen a big response in crude oil, and I think if we were going to see a big response in crude, we'd have already seen it already as the major or as the storm first hit. But now that it's kind of dissipating a little bit, we're just not seeing a huge reaction at this point. And so, and I'm imagining there's a lot of people that probably got long crude over the weekend, or knowing that Harvey was going to hit the coast, and so I would be a little leery of how much more upside in crude oil there is from here.
We have Blake, we have record long COT large specs position. They're longer now than they were when crude was over 100.
Wow. So yeah, I would assume that you've got to be a little careful with crude longs at this point.
Pretty crowded.
Right. Absolutely. So, all right. Well, I know you have your guest coming on, Greg. I thank you so much for being here today, and I'm glad to be back with you guys and back in the saddle again.
Good to have you back, and thank you, Wizard.
Thank you. Bye-bye, guys.
Thanks, Greg. All right.
Okay, Chris, I'm now going to make you the presenter. Look forward to hearing your voice and seeing a screen if you've prepared anything you want to show us. So
yeah, now do you see what do you see here? I don't know what you can
well, you have to hit the screen share option. I don't see anything. Hold on. I don't see anything yet. There we go. We got the dial up there, Chris.
Okay. Oh, right. See, I have two screens, so I'm gonna and I have some things set up. Let me pull this over. Okay.
Okay. All right.
That working?
Interesting. Yeah, that's great, Chris. So really, I've looked forward to this interview. It's so nice to meet you, Chris. You know, I've was aware of you for, a couple of decades ago when you had some association with Robert Prechter. And I'd like to start the interview by telling me how you and your family enjoyed going to see the solar eclipse.
Well, in 1991, there was that huge eclipse in Baja, and I couldn't get there. I was, early. I was writing the Spiral Calendar at the time, the book, and I put, on my bucket list, see a total solar eclipse. And last week, I checked that off my bucket list. But my bucket list is not any shorter because now I've added see another total solar eclipse to my bucket list.
Okay. Where did you travel to see it in totality?
Yeah, the partial is interesting, but it's a completely different experience once that thing goes total, and just an extraordinary. And I was with my kids, which was just really elevated the experience. And we had
cool. Yeah. And they know their dad, so they know their dad's a lunatic, right?
from way back, yes.
All right. So Chris, let's even go back a little further to those days, even before you started breaking out into the public scene. I read in your bio that you may have done a stint on a trading floor. How did you get involved in the business? Did you have anyone influence you? Any books that were left big impressions on you? Take us back to the beginning of your journey of how you got into the industry.
Sure. I went to art school, and like a lot of art school graduates, I was waiting on tables, and but that was generating some decent spare cash, and this was like 1980, and pennies, the penny stock Denver Oil Company thing was going on, and I was
Blind 'em and rob 'em. I mean, Blinder Robinson. Yeah. Okay.
But then exactly, Blinder Robinson, and then gold had that dramatic top in January of '80, and I thought, gee. This thing's going to go down. How do I play it? So this was my first experience with options, and I got an options account, and I bought some puts on ASA, which was the South African conglomerate, and I paid $3 for the puts, and I sold them at $6, and I thought I was brilliant, and they expired at 28.
Yeah. Okay.
And I said, gee, there must be people doing much better than I am and much smarter, and where are they? And I had a college friend who had got a job on the options exchange at San Francisco, and I went out and visited him. And I said, gee, this is for me. You walk in there and there's no windows. It's just like a casino. And so I started. I started at the bottom. Feeling. I was a runner. I was an exchange runner, and the business was booming. I quickly became a floor broker executing public orders, and from there became a market maker. And I was standing in the pit for the crash of '87, which was such an extraordinary experience.
Yes.
And that then motivated my research. But I think my research has always been really rooted in what I observed in the pit, which was the emotional content of markets and seeing the emotional quality of the behavior. And I used to say that a requirement for an economics PhD is that these guys really ought to stand in a pit with their net worth at risk of a 1 standard deviation move, and then nobody would believe in efficient markets anymore. So that was the very beginning.
Okay, so had a similar experience. Did you hear roars when they go through critical levels? I remember being a runner, started like you did at the CME, and all the brokers were very interested in any order that had STP after it. And noticed that when those orders got elected, we'd go fast market, there'd be an audible roar on the floor. And that was at a huge amount of times the intraday high or low, because locals would sell into the buy stops and buy into the sell stops and turn the market for a little bit. Did you get those audible roars when you went through critical resistance or support level? Because it was options there. People don't trade options with stops.
Yeah, well, the equity option was a little bit different, but the same idea in the sense that the volume came in at the turns, and that was exactly, I would be anticipating a market turn, and then after the fact, I would think, well, wait a minute, how come I wasn't on top of that? Well, it got so busy, you're so busy writing tickets that, and that's invariably, yes, the volume would be on the highs and the lows, and that's still the case. I don't think that's changed even after we've all moved to trading electronically.
Yeah, now we don't hear it, but the algos are the ones that are the stop hunters looking for liquidity. So let me ask you this, for people that do not know, can you give us an explanation of what the spiral calendar is? That's yes. What you're known for.
Extremely quickly, my first observation going through 1987 was, I was fascinated with how, like many, and I know the Paul Tudor Jones people did a lot of work on this, the comparison between 87 and 29 and the two crashes. And it was curious to me that it seemed to be a calendar event. They both happened in October, but they happened on different days. October 19th, 20th in 87, it was October 29th in 1929. Well, I thought, but that's our calendar. What about other calendars? And on a lunar calendar, the crashes are on the same date. And so that was the original observation. And, subsequently we saw that Hong Kong panic in 1997. It peaked on the same lunar date as those crashes. And in 2008, when everything fell apart, the high in the VIX, that volatility measure, also fell right on that same lunar calendar point. So that was the original observation. And then the second observation was that the distance between the crash, both the distance in the crashes of 29, but also the distance from top to top, if you measured it in lunar months, is precisely the square root of a Fibonacci number. And then, so that, in a sense, the spiral calendar, what it is, it's the set of numbers where lunar months are calculated as square roots of Fibonacci numbers, which gives you a set of fixed time units which link emotional markets. And so
how does that differ from, say, Gann stuff?
Oh, well, I looked at Gann for a while. It's
complicated.
Yeah, I don't think I can really make the comparison, but
okay.
One of the observations in the book was that when markets get very emotional, on the upside, when we see those parabolic upside moves, you look for tops right on the new moon. And, these two Bitcoin charts that I've got up there right now are examples of that, where you just had tremendous percentage moves in parabolas. And in both cases, bam, they just go right up into the new moon, and then that's it. So, You know, I've been interested in these cryptocurrencies because they seem to have a much larger emotional content, you know, and so the spiral calendar and this type of analysis has been pretty effective, and it's not necessarily useful all the time. I think in choppy markets or on emotional markets, it's really, you know, it's a tool that you pull out when things really go nuts, when people are behaving strangely, and then you look for the relationships.
Yeah, I saw your tweet on how you said that Bitcoin is a great example for people who study TA like you for you know, emotional behavior, you know, and irrational behavior in a market. So thank God for crypto, because everything, volatility levels everywhere else kind of dried up. So is it more typical that highs in all assets or instruments mainly happen on new moons rather than full?
Well, not all instruments, but I think it's only when things get really out of hand, you know, when they go parabolic. I mean, so just sort of normal markets, it doesn't apply. In other words, the gold peak in 1980 was 4 days after a new moon.
Okay.
So there's another example, but just kind of in the, I'll show, I've got some other charts of my Solunar work, which I think highlight some things.
Okay, yeah, I'd like, because, you know, wouldn't you say that the market, you know, especially some of the FANG stocks, even though, you know, they say it's the most hated bull market in history, when I look at the chart, especially the weekly, to me it looks like we could be in a parabolic stage in the market. What are you seeing?
Well, yeah, I mean, trying to find where the high is in this, you know, everything is so distorted because these banks, central banks, have pumped so much liquidity into it, and obviously that's feeding this crypto business. And well, let me, you know what, I want to just show you a couple of things right here on this first set of charts while we're here, just to illustrate this, the spiral calendar idea.
All right.
So now this chart shows, you know, these are spiral calendar distances. So when I say F6 here, this is the 6th Fibonacci number measured in lunar months. And part of what the spiral calendar found was that new moons near new or full moons close to either eclipses or solstices and equinoxes are often the focal point of these, and they connect. But you know, back in May we had this very sharp drop in Bitcoin, and then we had a similar relationship just a couple of weeks ago, and we somewhat mirrored it, and we had a decline. So you know, we saw this effect come in, but at the same time, this underlying trend in Bitcoin is so extraordinary it didn't break the market. That to me is one of the fascinating things. We just don't see this market break here. Well, here's one more. Now this was you can see the Fibonacci relationships here. Here's the summer solstice new moon, and then we have 3 tops all measure perfectly to that point, spiraling outwards, and underneath we see their Fibonacci relationships, square root of 0.382, 1.0, 1.618 from each of those. So that's a good example. Now I guess the other spiral calendar chart I have here, which is the S&P, this is the argument that we're making a potentially important top in stocks now. And you know, just a week ago, we had this measurement both from the 2009 low and the 2000 high, and I mean, it's right to the day, the 21st Fibonacci number and the 24th. And there's a relationship. So you know, we'll see if things break down in coming weeks. I think there's a good possibility. But you know, as you say, some stuff still looks okay. So it's a tough call here.
Yeah, you never know how far a rubber band can stretch, right, Chris? You know, when you
we know it can go farther than our accounts. That's
right. Yes, I've experimented with that. So You know what comes to mind when I look at August, and you brought up the top in gold in 1980. So you must also recall that the launch of the big bull market started in August of '82. I wonder if there's
Yes.
any kind of symmetry that you see between the launch of a major bull and possibly at least a short-term ending of a prolific bull 25 years later.
Well, my big picture, there's a major spiral calendar anniversary of that 82 low next year, next July, but it really ought to be a bottom. And so,
Okay.
so sort of, what fits with me is you get hard down 11 months or so now, and
Right.
and
then blow off. Then blow
then
off.
then the big inflation gets unleashed.
Okay.
After following that. So
Interesting. I was thinking about it. I know you cover all asset classes, and I've been thinking this in my head. Normally, almost anything in my head flies out of my mouth or on Twitter. But I've been thinking about the fact that, with what we see with a potential top here, with bonds in a retracement mode, with the dollar having pulled back dramatically, the euro rallying dramatically, that crude has been in an up move, that possibly what we get is some type of everything is bad market into that time frame, kind of a whiff of deflation, and then perhaps infrastructure, new Fed chairman, something like that is what takes us into the inflation and the end of the, big dollar decline, that there might be one more rally in the dollar going into this. So does that kind of line up with, shake everyone out of what they own, have them panic near a low, just like the housing crisis where homeowners became renters and hedge funds became landlords, shake everyone out during a whiff of deflation move across the board, and then everything is good again?
Well, yes, that fits. I mean, in a sense, I think these central banks have tried to fight the cycles. They've been trying to create inflation, for years, but they can't do it. And the reason they can't do it is because we're in the deflating cycle. And but normally in normal times, then the next progression is to a healthy growth. If you have low inflation, then that's a good cycle, and everything does well. And what I'm thinking happens is when we transition into that next phase, those economies that have been printing money like crazy, i.e. Japan and the US, or especially the US, instead of going into a healthy low inflation environment, we just skip that and head right into the runaway craziness, while any place that has been prudent in their policies would then enjoy the benefits of
you mean like China? That's been
like Asia, and all over Asia, and that just continues the progression of wealth from west to east that's been going on for a couple decades now.
Okay, interesting. Any view? Our bailiwick is currencies. Do you have any view? Are you a dollar follower, or any currency in particular that goes into your jigsaw puzzle?
I made a chart here just to sort of show some of my indicators, and it's a yen chart, so I can bring that over.
Cool.
And about 18 years ago, so I think when we start out, we all look at too many indicators, and then then ultimately we really need to find what works and narrow things down. And I really came up with 4 things, some of which I stole from other people, and but just 4 things that happen at market turns, and then program them and watch how they cluster. So this is a good example. These little crosses are RSI divergences. I developed this oscillator I call a cycle trap, which is very smooth and turns not too late. It's pretty good on getting in early. and then I use, just net line reversals. When you, get 3 bars moving one way, then if you penetrate that low, that's a signal. So that would be a sell there. And the fourth type of indicator is actually, there's none of them, something called a range bus bar. Some of these bars are painted red if they exceed a DeMark projected range, or they're painted green if they do it on the upside. But you get a nice reversal if you get a green and black bar at a top. That's an excellent reversal signal, or a red and white bar at a low. But the dollar is very sloppy. We see all these buy signals, but they're spread out, and the markets are unable to react to them. We can't even get back to resistance here on dollar yen. I mean, it's very pathetic. So, the dollar's ugly, and it continues to be ugly. And I was listening to the comments before I came on. Don't fade this euro move. Exactly correct. I mean, there's these. They haven't. Their corrections in the currencies have just been. They go sideways a few days instead of, they can't make any progress in the other direction. Then that's an indication.
Corrections have been marked by time rather than fib retraces.
Exactly. Right. So this is a rally to nowhere in the yen the last few days, and once that's over, it's in trouble again.
You have an oil or gold view, Chris?
Well, here this is an opportunity then to tell you, and I'll show you some my other work. I do something called a Soluna model, which people look at seasonal charts where you average, let's say the last 20 years or last 10 years of price. Well, what I've done is what a Soluna model is, simply a seasonal chart, but it's only averaging years where the lunar phases are the same as the current year. So in this example here, this is the Dow from 2015. The dotted line was the Soluna model for that year. Now, a typical seasonal chart will always show you the September and October is the weak month. But the Soluna model in 2015 said, hey, the weakness is going to be in the summer, not in the fall. And the blue line is how that turned out. Now, I think we've got, so here's crude oil seasonal model. And it's done pretty well this year, and it's bearish here, and I think it picks up bearishness going into the fall. But I think just a normal seasonal model shows you the same thing. The fall is sort of ugly. The metals are. I mean, longer term look very good to me. I think they just may need to do some more sideways and basing but.
So instead of having an event risk in October, we actually could be pushing new highs into the end of the year based on your Soluna S&P chart.
Well, that was that was 2015 Soluna chart. So
I see.
Here things. Let me now. Let me make.
Okay, you got 2017 up there now. Thank you for showing them. Yeah.
Okay, so. Now this is very interesting. On the top clip, this dotted line, this is tidal data. So this is the tides for 2017. The blue line here is the Soluna model for past years. In other words, years where the tidal rhythms were the same as 2017. So I've circled the places where the Soluna model effectively mirrored the tides. And so then on the bottom clip, this is really a sum of that tidal data plus the Soluna data. And then here is the Dow this year. And earlier in the spring, this was completely disconnected. The interesting thing with some of this Soluna tidal lunar stuff, it really seems to synchronize in the midsummer and work really well through the fall, and then sort of falls apart. Springtime. I don't know, but we've synced up nicely again. So this suggests we're strong here into the end of the month, and then things roll over. But it's not looking like a specific crash here, or whatever. But I think things will be ready to head south once the calendar gets into September.
Okay. great views, Chris. Was there anything else you wanted to show us? If not, why don't you go to your website and blog and show people where they can find you? Go ahead.
Yeah, okay, sure. I just, yeah, let me pull that up.
And it's interesting. So, you know, the moon affects the tides. So tidal motions would tie into your work because of that, right?
Yes, yes. And
Okay.
so, yeah, spiralcalendar.com. And I just want to say there are two things here. And this chapter 1 of the book, The Spiral Calendar, which I wrote 25 years ago. You can read the entire first chapter for free on the website.
Okay.
And then also, in 1998, I wrote a paper called Autumn Panics, a Calendar Phenomenon. And that paper won the Charles Dow Award from,
Wow.
and you could also read that paper on the website.
They give you a trophy or anything?
Yes, I have a nice piece of plexiglass with my name.
Oh, let me ask you this, Chris, have you ever been to a retirement dinner for a trader? Where they get a gold watch or anything like that? That's all I have. So,
here's another chart now. See, here's the pure title data for that's going on right now, and so we can see, high August 30th, then lower into September. So it's pretty interesting. It's fun to play with the title data. I think we've covered about everything.
Yeah, and since you study the tides, do you surf? Or did you used to when you were a younger guy?
No, I'm not an athlete. I would get hurt. I've got to be very careful. I stay away from skis, anything dangerous.
Okay. One mistake business kind of stuff. But you know what? Just like great surfers, you are, but you surf the market. And what I say is great surfers don't try and catch every wave. They wait for setups too.
Well,
so,
I think, that's the most important thing. I think with experience is just to be patient and because, stuff comes along and you absolutely can't chase the mediocre setups, and you just wait for that thing to have them completely cornered where it's a sure thing. And they come along. There's plenty of them happen.
How many would you say in a year? Per instrument, would you say four times a year, maybe?
Well, yes, that's probably about right. Now, the curious thing about these cryptocurrencies. Let me pull in another chart.
Oh yeah, they happen every 5 minutes.
I think here's Ether, and this was very good to me this year. And each of these green, it just formed perfect triangle after perfect triangle after perfect triangle. And the first triangle broke out at the end of February, and it was 16, and the last one happened when it was at 350 4 months later. But there were just 1, 2, 3, 4, 5, 6. There were 7 of these. And
7. That's number of completion.
They were all home runs, and you didn't have to do anything. You could wait until they broke out. And I have screen caps of some of the individuals, just triangle, A, B, C, D, E. It's perfect. Here's another one, A, B, C, D, E. That was the one at 140, A, B, C, D, E. Just bam, bam. They kept happening. And
did the high happen on a new moon up there on the first chart? Was that near?
No, it didn't. And the interesting thing with these cryptos is when they do sort of make peaks like we've seen in Bitcoin, the subsequent bear markets haven't been able to kill them. This is like it's a vampire market, and I don't think anybody knows. The market penetration of these. People, if you have a mobile phone in Uganda, you can be in crypto, and the penetration of these markets might be something much larger than anybody has ever seen before. So I don't know where it goes.
Yeah, maybe it's the U.S. government's letting it happen because it's where they want to go eventually. You know, India went cashless. China's going to try national crypto, and that would eliminate the cash. You know, they'll use the excuse for, like Modi did, tax evasion and all of that, to go cashless. So instead
but in the same sense, you know, some of these instruments, they're outside of the government's ability to, you know, if the concept of the central bank was an innovation of the 20th century, I mean, crypto is by definition an uncentral bank. It's the opposite, and it seems to be maybe the innovation of the 21st century.
Well, if you're paying attention to it, Chris, and you know, you and I are pretty old school, there's something very relevant there, and it seems like everyone finally into this mania stage, which who knows where it ends, is finally grasping the advantages of it. So,
well, yeah, I mean, obviously you have to be very careful, lots of risk management involved, but you know, if you're a trader, any place where there's volume and price movement, you know, that's the flame, and we're the moths.
Have you ever thrown market orders into any of your crypto trades?
Oh,
or
sure.
Always at the price, at the market?
On the liquid ones, yeah, you know.
Okay.
I mean,
What are spreads like on like Bitcoin? $10
it really depends on the exchange. I have accounts on 3 different exchanges, so
okay.
You know, like the GDAX, which is part of Coinbase, that is extremely liquid, and you know you can get in and out of $50,000 at the market and barely move things. But then, however, say on an exchange like that, you can't short it. You can't use margin. So then something like Kraken exchange, where you actually can put on a short against a dollar position, that place is not liquid at all. I would never use a market order there.
Okay.
Poloniex is in between. Poloniex has very good liquidity, and you can short against Bitcoin collateral, but you can't short against US dollar collateral. So, you know, each exchange is different, and you sort of have to assess it, and they have different fee structures. You know, so yeah, you can use market order someplace, but
okay.
Your mileage may vary.
Thank you so much for being with us and sharing your work, Chris. It's a pleasure and it's an honor meeting you. I've always wanted to interview you, and thank you for accepting and edifying our community today, my trading.
Well, you have a nice thing going on, so it's nice to be a part of it. I appreciate the opportunity.
Thank you very much, Chris. Maybe we could do this again. Most people are willing to return, so perhaps we could do this again down the road and see what's happening.
Yeah.
All right.
This has been fun. Thanks, Dale.
Thank you so much. Chris Carolyn, you could follow him on Twitter at SpiralCal, and you can follow him on his website and read that article, www.spiralcalendar.com. Thank you, viewers from investing.com. Thank you, Face. See everyone for Turnaround Tuesday. Good hunting the rest of the day. And most of all, remember, don't just count your pips, count your blessings. Adios.